Hey everyone, before I get started this week, I want to remind you to register for the live webcast on October 29th, as Marcus and Millichap CEO Hissam Naji host Center Square's Managing Director of Private Real Estate, Jeff Reeder, Eisner Amper's Managing Partner of Real Estate Services, Lisa Nee, and myself in a conversation focusing on the 2026 commercial real estate investment outlook. Now, Jeff leads investment activity across a variety of commercial real estate property types for Center Square, a $13 billion investment fund, and Lisa is a leading commercial real estate investment accountant and tax expert who has frequently appeared on Bloomberg News. Together, we'll share our insights on what's happening with the interest rates, key tax rule changes, and other economic, performance, and investment trends shaping the commercial real estate outlook for 2026. You can register on marcusmillichap.com. Now, it's commercial real estate conference season, and over the last few weeks, I've had the opportunity to connect with a wide range of investors all over the country. And I have to say, the feedback I've been getting has been increasingly bullish. Several investors have told me that they're aggressively ramping up their acquisition strategies and that they believe we're on the leading edge of a new real estate cycle. When I talk to them, they cite four important trends. First, they highlight the repricing of assets. Cap rates have increased by about 80 to 130 basis points from where they were in 2022, and in many cases, investors are capitalizing on positive leverage. Several investors have also mentioned that they're acquiring high-quality assets below replacement cost. They aren't waiting for a wave of distressed assets to come to the market. They're finding well-priced properties with upside potential to fill their portfolios. The second trend investors highlight when I'm talking to them is the positive performance outlook. Multifamily investors have reiterated the affordability gap between apartment rents and homeownership. They highlight the falling pace of construction in many markets across the U.S. and their belief that housing remains undersupplied on a macro level. And they anticipate strengthening rent growth over the next several years. Some of the office investors I've spoken with have highlighted that space demand has shifted into positive territory, and they believe select assets will outperform, especially in the urban core of several key metros. They did indicate, however, that not all office properties or markets will perform well, and they're favoring newer, highly amenitized, and walkable office properties. Industrial investors have mentioned the strong performance of small bay and infill properties, and they highlight the falling pace of industrial space construction. They believe demand will increasingly outstrip supply, especially properties focused on servicing local area residents. Retail investors that I've spoken with have been particularly positive about neighborhood and community centers that are either anchored or shadow anchored by a leading grocery store or other necessity-based retailer. They believe that while uncertainty has temporarily slowed space demand, the very limited construction pipeline will favor the sector going forward. The third reason investors believe a window of opportunity is opening is the downward trend in interest rates. Now, none of the investors that I spoke with indicated they believe rates will fall sharply, but many of them said they think the 10-year Treasury could dip into the mid to upper 3% range over the course of the next year. And they believe that the lending climate will continue to improve as deregulation frees up more debt capital. And the fourth thing investors have been telling me is that they believe commercial real estate will offer durable returns even if other investment classes face a period of instability. There are concerns among investors that the stock market, gold, and other investment options may be a bit frothy at this point. So if, as these investors that I've been talking to have suggested, the market is entering a new cycle, then the competition for assets could become heated in the coming year, making it more challenging to acquire properties as the flow of capital into the sector increases. But Many investors aren't seeing this opportunistic perspective because their view is being blocked by short-term headwinds and elevated uncertainty, which is why investors always need to keep their eyes on the horizon.